SpaceX is no longer just the private rocket company everyone wanted to invest in. Now, it has actually entered Wall Street. The IPO priced at $135 per share, raising $75 billion in the largest offering ever. At pricing, SpaceX was valued around $1.77 trillion, instantly joining the world's most powerful companies. Then, on its NASDAQ debut, the stock surged, pushing the company's market value even higher within hours. But the real story is not just the number. It is why investors were willing to pay so much. Because Wall Street is not only pricing rockets, it is pricing satellites, internet, defense, AI, and the future economy above Earth. Before the listing, investor demand was reported near 4 times the available shares. That means scarcity was already creating pressure. That demand matters because IPOs are not only about companies. They are also about psychology, access, and timing. For years, ordinary investors could only watch SpaceX from outside, while private investors captured the early growth. Now the public market finally has a way in. That alone made the IPO feel historic before trading even began. The IPO was not just big because of size. It was big because SpaceX sits across multiple future industries. So to understand the valuation, we need to understand how SpaceX changed space economics first. For decades, rockets worked like disposable machines. They launched once, delivered their payload, then burned up or crashed into the ocean. Imagine flying a passenger plane one time, then throwing it away. That was basically the old economic model of space. SpaceX attacked that model with one simple idea: bring the rocket back, land it safely, and use it again. When boosters began landing vertically, the impossible became repeatable. And repeatability is what turns science fiction into business infrastructure. Reusability made launches more frequent and potentially cheaper, helping companies, governments, and scientists think differently about orbit. This is why investors care. SpaceX was not just building rockets, it was building transportation for the space economy. But rockets alone do not explain a trillion-dollar valuation. The bigger recurring revenue story is Starlink. Starlink turned SpaceX from a launch company into a global internet infrastructure company with satellites acting like towers in orbit. Thousands of satellites create a network that can reach places where cables, towers, and traditional internet may never arrive. That means remote villages, ships, aircraft, disaster zones, and conflict areas can all become connected from orbit. Internet is not just entertainment anymore. It supports education, payments, defense, emergency response, logistics, and modern business. For Wall Street, that matters because infrastructure can create recurring revenue, customer dependency, scale, and long-term economic power. So the IPO was not priced like a rocket manufacturer. It was priced like a company controlling future infrastructure. Investors saw launch services, satellite internet, defense contracts, global communications, AI demand, and future space logistics in one company. This is why the IPO created urgency. It looked less like buying shares, and more like buying optionality on the future. And once public trading began, that excitement became visible in the stock move and the market reaction. But momentum is not the same as certainty. A rising stock can show excitement, not necessarily proof of future profits. Then came another important detail. Underwriters exercised the greenshoe option, lifting total IPO proceeds to about $85.7 billion. A greenshoe lets underwriters sell extra shares when demand is strong, helping stabilize trading and increase the final raise. For viewers, this is important. The IPO number was not just hype. There was real institutional demand behind it. Then, SpaceX made the story even bigger by announcing a $60 billion all-stock deal for Anysphere, the company behind Cursor. Cursor is known for AI-assisted coding, and that matters because modern aerospace is also a software problem. Rockets, satellites, launch operations, robotics, and orbital networks all depend on software that must work under extreme pressure. So the cursor deal tells investors SpaceX may be thinking beyond space hardware and deeper into AI-powered engineering. This matters because SpaceX is now being seen as space, communications, defense, and AI infrastructure in one platform. That is why the market may value SpaceX differently from traditional aerospace companies with slower growth and narrower business models. But it also raises a serious question. Is Wall Street valuing current business results or future possibilities? Because even with all this excitement, SpaceX still faces massive costs, technical risk, competition, and execution pressure. Rockets are expensive. Starship is ambitious. Satellite networks require constant upgrades. And AI acquisitions bring integration challenges. A high valuation means the company must keep proving that its future can eventually justify today's market price. This is the danger of historic IPOs. Real innovation and market emotion can become mixed together very quickly. Still, SpaceX's IPO may change how markets value the entire space economy, not just one company. For most of modern history, space was controlled by governments, national agencies, military budgets, and long political timelines. Now private companies are building rockets, satellites, lunar systems, orbital platforms, and global communication networks. Space is becoming a commercial layer above Earth, and public markets are now being asked to finance that layer. That is the bigger lesson for viewers. The space race is no longer only about flags and rockets. It is now about internet access, defense, AI software, data movement, orbital logistics, and who owns the infrastructure. That is why SpaceX's IPO is not just a finance story. It is a technology, infrastructure, and power story. The question is not whether the IPO was huge. The question is whether SpaceX can grow into the expectations it created. If it succeeds, SpaceX could become one of the defining infrastructure companies of the 21st century. If it fails to meet the hype, the same valuation that made history could become a warning for investors. But one thing is clear. Wall Street is no longer only looking at Earth. It is now pricing the economy above it, above